All right, here on the Market Day Report, I'm John Jenkinson. Thank you very much for joining us on this Tuesday. The markets are back at work after taking a holiday yesterday with the national holiday. We've got the latest NOPA crush numbers. We'll have those coming up in a moment first, but let's look at the futures going forward here as we've got just a little over an hour and a half here left of trade. We stop at the corn market first, and that's where we find things have turned around again in the corn market. We've been kind of range bound here on a quarter to a half a penny on either side of unchanged. Right now, March corn is up a half at 346 3/4. May corn unchanged at 354 3/4. These are brand new and instant quotes. December corn steady. This is the new crop, 380 1/2. Now that's only a half a penny off of its low of 380. But 3 cents under the high of 383. So as you can tell, a very narrow trade here. For the soybean market right now, it's March soybeans up a nickel at 965 1/2, losing some of its momentum from earlier. September soybeans up 3 3/4 at 986 1/4. For the wheat market, we're still lower. March Chicago wheat down 4 1/2, 416. It's May wheat down 5, and new crop July Chicago wheat is down 3 3/4 at 442 3/4. Over to the Kansas City market, March down 2 1/2, 423 3/4. July Kansas City wheat 453 1/2. That's down 1 3/4. So not as low as what we were earlier. We were clear down to 450 1/4 in this contract, but starting to come back just a little bit here. For the Minneapolis wheat market, March is down 2 1/4, 610 1/2. But now a little bit of a change. July Minneapolis wheat up 1 3/4 at 626 1/4. The rest of those contracts are either unchanged or lower. If we check out the cotton market today, that March cotton contract is down 46 points at 81.22. May cotton down 52 at 81.44. The NOPA soybean crush report was out just a little bit ago, and it basically showed where December had a new record for December crush. And it came in at 166.38 million bushel. And as I mentioned, that is a new record for December. The previous month was 163.5 million bushel. The December soybean oil stocks, 1.54 billion pounds, and that was compared to last month's 1.33 billion pounds, and so quite a jump there, a big jump in soybean oil stocks. But the crush we're still crushing at record pace. Let's also check out the crude oil market. While we're here, we go to the crude oil. And this market was lower a good part of the morning by about 40 cents. We're still there. February crude oil down 43 at 63.87. March crude down 39 at 63.84. I was talking to one market analyst this morning who said that this market may be finding some firm ground here to take the next level higher, and eventually, if we stay on track of where production and usage is right now, could take us all the way to $80. The heating oil market here at midday right now, down just a little over a penny and a half on the nearby contract, 206. And for the U.S. dollar today, and keep in mind that the Dow had hit all-time record highs again today. March dollar index down 360 right now at 93.80. June down 230 at 91.50. And coming up in just a moment, the livestock trade straight ahead here on the Market Day Report. Stay tuned. Flashed it up there on the screen. Class 3 milk right now on the nearby contract up 6 at 13.82, and we're still watching that after that market has really been quite a bit weaker here also lately. Let's go to the live cattle market now and get you up to date before we get analysis with Scott Gecas here. We start with February. It's up 30 at 117.68. April live cattle up 35 at 119.80. June up 18 at 111.80. January feeder cattle up 43 3 cents at 144.78 a hundredweight. March up 10 at 142.75. April feeder cattle up 12 at 143.12. No asking prices really established yet. No bids established yet. The show list kind of looked over already, and from what we understand from sources, the show list is about the average size this time around. We go to the lean hogs. That front contract of February is up $1.42 at $73. April up $1.43 at $75.75. May hogs up $1.65 at $80.65. Let's go to the edge of the trading floor in Chicago at the CME Group. Scott Gecas with Longleaf Trading is here with us. Scott, good to talk to you today. And first of all, we'll start with the cattle market. This time last week, we got all kinds of excited and got cattle trade done early in the week. Now everybody's just kind of quiet here.
Yeah, and that was the main focus, just across the board in the grains with the whole NAFTA thing. You've seen that big sharp sell-off on Wednesday. A lot of the traders just across the board are seeing that it's pretty much overdone. So you're seeing a bounce in the hogs, you're seeing a little bit of bounce in the cattle. With the cattle trading at a discount to cash, that is supporting the short-term demand. Slaughter rates as well as the production is slightly higher than last year. They're expecting a beef production to increase a little bit in 2018. Traders are still net long, decreasing a little bit of contracts, so that means that we're hitting a toppy here. It's in a tight range between 115 and 120. I would look, to stay in that range. You're looking for sideways trade. Anything above or below those two lines, that's your direction.
This cutout here at midday, a little bit weaker, but we're still holding it rather solid here going into a time period when usually we see a lot of pullback.
Yeah, and I think that has to go with, what happened on Wednesday. You've seen a big sharp sell-off. Traders are looking at it, it's a little overdone. So even with that, cutout value coming into play, it's still at levels that should be a little bit higher.
All right, choice down 46 cents here at midday, 207.57. The selects down 74 at 201.30. Scott, when we talk about the pork cutouts, all the way across the board here, these were all higher. The carcasses, the loins, the hams, the bellies all higher. That loin jumping 207 at 72.78. Then when you take a look at the futures, we're solidly higher here.
Yeah, right. And I've been saying for, weeks on end with the, the lean hog market that, above 70 is, a very bullish level. Above 72 is very bullish. We still got a lot of room to fill all the way up to 80, but we'll see if we can actually get there. Being off of, Wednesday's results, that big sharp sell-off with increasing volume, you're seeing all those, declines being erased as, yesterday, today. Well, yesterday market was closed, but as you can see today, we're up above over 73. So,
and we still have quite a spread between those nearby contracts and those deferred contracts still trading up well into the 80s.
Yeah, exactly. So we're going to keep our eye on that and, look to stay a little bit bullish in the lean hog market. Like I said, it does have a gap to fill all the way up to 80. That is a long ways away. It's not going to happen overnight, but, we're going to stay bullish above 72 for sure.
The chief market strategist for Longleaf Trading, Scott Gecas, here with us. Scott, always good to talk to you. Thank you very much. We appreciate it. And as we mentioned earlier, the dollar just a little bit weaker here today. We're going to watch that closely. But, man, the Dow pushing above 26,000 for the first time, setting another new record today.
All right. Thank you very much, John.